Hello and welcome back to my 10 favorite people. Hope you're doing well. Let's talk about the Bitcoin mania phase. We've been monitoring the relationship between the US dollar index and Bitcoin for months now because we know that Bitcoin's past two mania phases required a prolonged drop in the US dollar index, and that's when we saw those magnificent alt seasons as well. But yesterday we saw an incredible bounce on the US dollar index off of that 200-week moving average we've been monitoring, thanks to some stronger than anticipated labor market data and drop in the unemployment rate. And the funny thing is, whenever the labor market data comes in worse than expected, the bears start appearing out of nowhere and start celebrating, saying they were right. But whenever the labor market data comes in better than expected, they say that it can't be trusted because it's government data and they fudge the numbers. So if the data agrees with their bias, it's accurate and we should be terrified of a recession. But when the data is against their bias, it's because the government makes up the numbers and we can't trust the data. So please make that make sense. But anyway, we kind of saw this coming because we were monitoring initial jobless claims and they remained well below their cycle highs from July of 2023 and well below what we've seen on average at the start of recessions. So we weren't really seeing any major signs of layoffs. And when we looked at continuing jobless claims, these are people that are continuing to file for unemployment because they haven't been able to find a job. That was still below its cycle highs and still well below the average at the start of recessions. So the number of unemployed people wasn't spiking aggressively either. And that made us feel as though maybe the unemployment rate was counting some new entrants into the workforce and wasn't going up due to the fact that people were getting laid off. And this is quite strange because in every previous cycle, once the unemployment rate starts going higher and gets above its 2-year moving average in yellow, it doesn't really roll over like we've seen recently. But it's nice to see that the unemployment rate is not going up. No matter what it means for money printing or the economy, I will never celebrate people getting laid off on this channel just because it means Bitcoin or stocks are going to go up. So I'm very happy to see it rolling over, and I'm happy that we were right with our presumption that this initial jobless claims and continuing jobless claims data would likely mean that the unemployment rate wasn't going to spike up. But the reason why that unemployment rate print resulted in this strong bounce in the US dollar index is because it likely means the Fed is going to have to be a little bit less dovish than anticipated, because the main reason they were able to justify cutting rates early were by looking at the unemployment rate starting to go higher. But now that it's rolling over, we can see the market has already priced in only 25 basis points lower for the November meeting, and then another 25 basis point rate cut in December, and then again in January. And they're even starting to hint at a very small chance of no rate cuts happening in November and December, depending on the data. But right now, the consensus is 0.25% lower on the Fed funds rate in each meeting. And this is also going to depend very highly on what we see with the inflation data, because ever since the Fed announced rate cuts in late September, we've been seeing the inflation index going higher on Truflation, which tends to be a leading indicator on CPI and core CPI. And we have a very important CPI print coming up next week on Thursday. So if this Truflation reading is any type of warning sign and we see inflation start to slowly tick higher over the next few months, it's going to be very hard for the Fed to justify continuing with cutting rates, especially with the stock market at all-time highs and the unemployment rate going down. And this is why we saw such an impressive bounce from the US dollar index as the market started to push back those rate cuts and reduce the expectations. But the real concerning thing about this in the short term is that now the Fed is likely going to have to push back going back to QE even sooner, and they're probably going to continue reducing their balance sheet for at least the next 2 or 3 months, which could also pull global liquidity lower because they don't have that labor market weakness to use as an excuse to go back to QE sooner than the market had initially anticipated. And we know Bitcoin has a very strong correlation with global liquidity. So if the Fed can't go back to QE in the short term, it means we're likely going to have to be a little bit more patient. Bitcoin could still slowly grind higher, but we're likely not going to see any of those insane mania phase rallies unless we see global liquidity really increase. And maybe it could come from the other central banks, but I'm not expecting any major drops in the US dollar index while the labor market is strong and the Fed doesn't have an excuse to cut rates aggressively and go back to QE. So it likely means we have to be a little bit more patient in the short term, and Bitcoin might slowly grind its way higher instead of seeing some insane mania phase like 2021 or 2017. So yesterday's labor market print makes a very strong argument for things to take a little bit longer. I'm still cautiously optimistic that maybe we can break out sooner. Of course, a lot of that is also going to rely on the election. We still have Bitcoin maintaining above that 61.5K range low. Would love to see us hold above it this week if the hopes of the shortened cycle scenario and early breakout are going to remain alive, but I always like being prepared for other outcomes. And if we're seeing the labor market remain strong, and if we're seeing early signs that maybe inflation is going to start reigniting here in the short term, then these things might take a little bit longer than most market participants are ready for. Again, always happy to see us break out early, but always prepared for the worst, because I have seen this market catch people off guard so many times since I joined the space in 2019. And that's why I'm still very open to that yellow possible area being retested. We have the 200 and 100 week moving averages there. It's our last major consolidation around the 2024 yearly open. So getting another chance to buy at those prices would be amazing, but it's not guaranteed, and we could still rally higher from here. I just have cash ready in case we get that opportunity. The good news is that it is Q4, and Q4 is always volatile. We've never had a Q4 where Bitcoin's price remained flat. It's always either aggressively higher or lower, and there's always a ton of volatility in between. And because of that volatility we see every year in Q4, I think it's incredibly likely we revisit prices below 50K or above 70K sometime in the next 90 days or so. And I think the election is going to be the fuel on the fire for that volatility. It's crazy to think that we're very close to being only 30 days away, and it's still this close based on Polymarket, which is what I like to use since investors have their money on the line when making these predictions. But having it be this close and this down to the wire is only going to exaggerate volatility in risk assets, especially because Trump is seen as the pro-crypto candidate as of right now, and Harris is seen to be a little bit more anti-crypto, or at least her party has given off that vibe over the past 4 years. So we're going to have to wait and see. We know November tends to set the trend for the rest of the year, and December tends to match whatever happens in November. And with only 30 days away from this election, I think we have a lot of volatility and excitement to look forward to and prepare for. And we've seen that already. We have the S&P 500 volatility index slowly creeping higher month over month as we approach November. We did see a nice green close for the S&P 500 this week after a little bit of uncertainty, and Bitcoin was able to have a nice bounce off of those lower 60,000s prices that we visited. And the S&P 500 being in price discovery is a backdrop requirement if we're going to see Bitcoin rally higher. I don't see Bitcoin going into some huge rally while the S&P 500 is selling off. So as long as the S&P 500 can maintain its rally, we can stay cautiously optimistic that Bitcoin could still have some upside. Now, taking a look at the economic data, the GDP now estimate is still coming in positive at about 2.5% and still well above recessionary levels. I know this can change very quickly, but we will still continue to monitor it. And we did end up seeing the end of the fiscal year for 2024 ending at the end of September with a final grand total of $1.9 trillion, which is higher than what we saw in 2023 at $1.7 trillion and way higher than what we saw in 2022 at 1.4 trillion. And as long as that debt issuance remains this aggressive, and as long as we're seeing these huge deficits, I have a hard time being really concerned about recessions in the short term, because I do think the federal government and the Federal Reserve are working to keep things afloat in the background, even though they're hiking rates and trying to look aggressive when talking to the media or talking to the public. It's very clear that they have no intentions of letting this economy fall into recession, and they'd rather increase to the insane amount of government debt we have and eventually monetize that debt and increase the money supply instead of facing the music and letting the economy collapse until they're left with no choice. So is this going to become a major issue one day? It definitely will, but in the short term, I'm not seeing any major warning signs or red flags that make me concerned that things are going to collapse within the next few months. And I think this chart perfectly illustrates the relationship between the US national debt and risk assets. The government uses the national debt to stimulate the economy. Eventually that debt gets monetized, and because the denominator of our risk assets is the US dollar, they get repriced higher as the fiat currency gets debased and the money supply expands, which is why we're bullish risk assets like the S&P 500 in the long term. We can have disagreements over the short term. Maybe bears want to see a market crash, maybe they want to see a recession, but betting against US stocks in the long term has been quite the losing bet. And I think betting against Bitcoin in the long term on larger timeframes will be a similar losing bet, as long as we see this rate of debt issuance increase, and as long as we see the trend of fiat currency debasement increase. And now that Bitcoin has been de-risked thanks to regulatory clarity, and the largest holders of Bitcoin being BlackRock, a very large and regulated asset manager, and second is MicroStrategy, a publicly traded US company, and then we have Fidelity in fourth, and I think Fidelity will flip grayscale over time as well. So the three largest holders being regulated US entities is incredibly good for Bitcoin in the long term, in my opinion, because it takes the regulatory risk off the table, which for the longest time was the biggest counter argument against Bitcoin. But of course, hard to predict exactly what's going to happen in the short term, but when we zoom out and look at longer time frames, I find myself being quite optimistic for Bitcoin and the S&P 500. So we'll see what the US dollar index does after this bounce and whether or not it's going to get rejected at the resistance level we've been talking about and monitoring for a while now, and if we're going to see that aggressive drop into the risk-on zone, which is what's going to be needed to send Bitcoin into that mania phase like 2021 and 2017. But anyway, let me know what you expect. What are you expecting for Q4? Will we close the year above or below 60,000? Would love to know what you guys expect. And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.